Of Lululemon dropping today and down nearly 35% this year. Jefferies publishing a note yesterday warning that Lulu is losing market share to private competitor Alo Yoga in a key region, Miami. They go on to say fashion trends start on the coast and move inward. We anticipate lower sales and earnings in the U.S. for 2025. The analyst behind the note, Randy Connick, joins us now. His $220 price target on Lulu is one of the lowest on the street. You've been a bear on this one for quite some time, Randy, and it's been a good call. You also point out that in addition to the trends moving from the coast inward, and so the assumption is that they're going to continue to lose market share as you go into the United States, that belt bag was really an artificial boost to earnings that's just not going to be replicated.
Yeah, this company has, I think, a major problem. Look, we have to take a step back and think about what has transpired over the last few years. If you think back during COVID, Lululemon was the it brand in the it space of athleisure. So that company dramatically catapulted its revenue base upward. And on top of that, the company got helped by that belt bag trend that you talked about. That lasted for a couple of years. But now, since our bearish call over the last couple of years, what we've seen is this idea that the company's hitting a growth wall. And in order to continue that growth to across the board and maintain that high PE multiple that Wall Street loves, because Wall Street loves growth, the company started to go into non-core categories like the belt bag, like long ankle-length skirts, sweatshirts with logos on top of it, even sweaters. This is not what made Lululemon famous 20 years ago. The company's just trying to stretch itself thin, and that's why we think there's a problem ahead.
Yeah, and there are also other missteps, like the color palettes are all off, right? And that stuff ends up on the markdown rack that Guy likes to shop on.
You noticed that, the palettes are off.
Oh, it's crazy.
What does management need to do? Because they do want to emphasize newness, but you're just saying the newness that they are trying to emphasize at this point is the wrong kind of newness.
Look, I think this is just kicking the can down the road. The CEO of the company has proverbially talked about newness for literally about 6 months. And I think where the problem lies with the company is this, you have to they're in denial, right? So I think the fact on the ground from all of our research is that the company's losing market share. It's pretty obvious, right? Especially in markets like Miami. I was actually in China last week. The company has got growth there, but it may not be for long. But at the end of the day, what the company's trying to tell the market is, look, our numbers are slowing, but the reason they're slowing is because of self-inflicted wounds of we don't have enough newness, whether it's color, whether it's pattern, and whether it's new categories, right? So the problem is the newness has been in place for the last few months, and numbers continue to slow. In fact, if you look at the holiday numbers, they're actually pretty scary because the company posted about a flattish type of number in the United States market during holiday. Their e-commerce business was only up 4% during the fourth quarter. That is in the space of the best holiday season we've seen in 20 years. So something's wrong here, and I think it's just market share. They're losing market share. They're losing it quick. Their core customers going elsewhere to these competitors, and that's a problem going forward.
Randy, it's Karen. Thanks. Good call so far. What about some of their back-to-work stuff for men? I actually thought they were getting some traction there. It's people going back to the office in their pants. Tim?
Well,
Tim wears those shirts on air.
I'm not wearing one now, but Randy, yes. But my color palette, I know, is right on. I'm just not wearing the stretchy one that says, let them cook.
Yeah, exactly. Great looking tie. So, look, I think the men's business has been great, although the men's business is growing. It's not accelerating any longer. So what does that mean? It means that men have had their fill of the pants thus far in the last few years, but now we're kind of starting to play that out, right? And there's competition in that space, obviously, Viore and others, Roan, et cetera. So I think the problem with Lulu, and people forget, is Lulu's not just competing with other sportswear brands and other activewear brands. Lululemon is competing with hundreds, thousands of other apparel companies around the world. And that's the biggest issue here. So, men's has been great. It's not going to last. Belt bag has been great. It's already starting to fade. The core is slowing. International is great, but not accelerating any longer either. And now this company's at peak sales per foot, peak margins, peak earnings. We think that all comes crumbling down in 2025.